Good morning, MMTs. Time 5:50 a.m. Pacific Standard Time, 6/16/2011. Greece is still taking its toll. The New York Stock Exchange has had a fairly decent 7-week correction so far. And the thing that we're looking at today is a gap open list, SUG. We had an upgrade on YOKU by Goldman Sachs. Okay, but there's a couple of little bright spots in here. Now, that's the gap open. Now, the gap open down, okay, here are some of the names. Okay, let's see if there's any that we cover. Oh, that NVO is down another 3.36. One of the things that we're going to be looking at is how markets put in bottoms and an options monthly expiration volatility. News could hit the wires immediately. I would suggest that all of the MMTs are watching the VIX and the VXN that have broke higher as we've had a good sell-off the other day. One of the other things I would be watching would be the SQQQ bear along with the TQQQ bull. Because what it's going to tell us is that stocks within their price volatility in this expiration is that we're going to go up to those levels as we've been doing, and then we are going to roll over. And one of the things that the MMTs are perfecting is to let those tops get put in. So you go up, you pull back 369, then you go up with the 369 to a double top. What is the qualifier, MMT? Distribution bar, breaking half of the previous green bar. Because that would show that the seller would be still in control. And basically, if there is any kind of manufactured data that would cause a certain technical level to come down on the bottoms, we're going to watch and see if we break the March lows of 2011 in the S&P 500 as well. And basically, what the trade management will be a sideways movement with intraday consolidations and getting the greater bottom left elbow back to the neckline, entry long to exit to short is the primary key focus. Opening bell is upon us. And that's the gap open down list. And once again, 60% of your program trading happens here. Okay, ATU, so some of these little gaps, ups, we're going to have to find out what some of the news is. We will be focusing on YOKU. Sina is a good trade right now in pre-market. They're trying to raise that up to the short. They're going to try to get some call money out of the call side of the market that has been taken to the woodshed for the irrational, exuberant bull, and the people who buy those options and hold them down to zero have to pay their price and their day of reckoning. They're on the wrong side of the market. The bottom line is they're on the wrong side of the trade. So, MMTs, as everyone is on the wrong side, of course, we called a short almost 7 weeks ago. Of course, you couldn't tell a bull that, could you? Oh, no. You can't tell a bull anything. Because they get to such an irrational, exuberant stages that they have to have a 7-week haircut, which has been one of the longest week-over-week declines, as we said in all of our live videos on our website, and all the sectors and indices would have to come tumbling down. And the reason why? The poor investor or poor little traders, they get stuck in the middle of this irrational exuberance because they get pulled into it. And the results are what they are. The realities are what they are. And we're going to make a market today, as we do every day, that we gather here to do. And the thing about it is, as that irrational exuberance is paying its price, we are short-term oversold and due for a bounce. But however, there are characteristics of A, B, and C, just like we called the top of the correction. Of course, you couldn't tell whenever you told anyone that. Of course, they were going to go into immediate denial. immediate denial. Now, when the bottom does get here and it goes up, of course they won't get in because they'll still be locked in fear, and they'll still have the same kind of denial, except it'll be at a bottom, and how a bottom is actually manufactured and made. Not only that, what goes into it and what are the culprits to it. Okay? Now, it is Thursday. Tomorrow's going to be Friday. I will caution the bear who's coming into this trade late. I would not be short over the weekend. If you are short, which we are from 7 weeks ago, we're so deep in the money it don't matter. We can buy long against that. So we can control our volatility and risk. Something you need to learn how to do.